Viewers, welcome to a special edition of the Forbes India budget coverage for FY25. The FM Nirmala Sitharaman has delivered her speech in the third term of the ruling BJP government. The stock markets today were extremely volatile over a specific move relating to capital gains tax, but overall the government is giving us a direction of everything in motion. Capital expenditure is on track the way as she described in the interim budget in February, and there is enough being done in social welfare schemes and the whole job creation concern is also being addressed. To decode the budget and to actually help us understand whether the economy is on track and whether the government has done enough, we have two experts with us joining us. We have Mr. Rajiv Anand, Deputy MD of Axis Bank. Welcome, Rajiv. And we have Mousami Nagarsenkar from a partner with Deloitte India, a tax expert with Deloitte India, joining us to decode that fine print which is announced in the budget. Rajiv and Mousami, welcome. I'll open the conversation with you, Rajiv. Help us understand, has Nirmala Sitharaman done enough?
I think it's a good budget in the sense of the fact. What I like, the fact that fiscal prudence has not been thrown in the dustbin, and now there's a glide path to 4.5, and I don't think this is appreciated enough. The fact that our fisc is going to 4.5% in the next 3 years is huge. Look at that in the context of the United States, which has a massive fiscal deficit problem. They are currently somewhere in the vicinity of 7 to 8%. Irrespective of who wins in the US, those numbers are not going to come down anytime soon. And therefore, for a country like us to be able to manage inflation and growth with a fiscally prudent budget, I think is in itself a massive achievement. What does that mean? It means that the cost of capital for this country is going to come down over a period of time, perhaps, but is certainly going to come down. That's good for corporate India balance sheets, and I think it is just almost inevitable that we will now get a sovereign upgrade once we are able to deliver on the numbers that we have promised. And I think what I also like is that the fiscal arithmetic that we have seen in this budget is credible. There is very little that you can argue with in the numbers, and therefore, to that extent, one could always argue that the finance minister has in a sense done enough, at least from a fiscal prudence perspective. The focus on infrastructure, the focus on jobs, on social spending, I think is all positive, and the fact that the finance minister has taken a little bit of all the earnings of particularly readers of Forbes, taken a little bit of earnings away from their capital gains and put it into the hands of the middle class and into the hands of the entrepreneurs, i.e. taking away angel tax, I think is I think on the margin has hurt sentiment on the market side, but I think it's too small a tinkering to affect anybody over a long period of time. So all in all, I think the thrust has been right, but the big issue is that, which is a huge positive, is fiscal prudence.
Okay. So I'll keep you here, Rajiv, trying to understand that yes, fiscal prudence, you said, is on track. Enough is being done to create more jobs. But how do you address the other part of growth of the economy in terms of improving consumption demand? It's just when more and more jobs are created, I have safety of income security, then I will start spending more. Has she done enough on spending?
It's a difficult question and an interesting question. I think on the one side, you're seeing an environment where consumption has been relatively slow, but you're also in an environment where household debt has actually been going up quite strongly over the last few years. So as you put more money into people's pockets, will that mean that they will manage their debt by paying it down, or will they spend? That's at this point in time moot. But the fact that you're creating more jobs, you are also creating greater levels of entrepreneurship, should by definition improve consumption as we go forward. Second is, I think we also need to think about consumption in the context of the consumption basket itself is changing. And as I talk to my clients, people are perhaps not buying that extra shirt because they've already bought a house, and they're refurbishing their house, and painting it and putting new sofas and TVs and such like. And also they're spending money on traveling and creating experiences. And so therefore airline companies are doing really well, hotel companies are doing really well. And so therefore the consumption patterns that we have traditionally been comfortable with are perhaps changing, and I think one needs to take cognizance of that as well.
The markets were very nervous today for obvious reasons, looking at changes which came in LTCG and in the short-term capital gains tax. Could you just, specify and simplify things for us? Really, what is she trying to do, and what will it actually affect?
On the capital gains tax, Salil, there have been changes, and there was a long-standing demand from industry or from taxpayers that the capital gains tax is a very complex regime and needs to be simplified. There were various holding periods, 12 months, 24 months, 36 months. There were various tax rates, different tax rates for residents, non-residents, different tax rates for listed, unlisted, equity-oriented, debt-oriented, very complex. So to an extent, she has tried to simplify the capital gains tax. And what she has done now is there will be only two holding periods, either 12 months or 24 months. So the 36 months that we used to have will no longer be there. It used to be mostly for gold, physical gold, or maybe debt-oriented mutual funds. So that's not going to be there. The other is the tax rates, the multiple tax rates that we had. Now we will have a 12.5% tax rate and a 20% tax rate, only two tax rates. But one notable change, if I may say, is the complete doing away with what we called the indexation of the cost of acquisition. So how it worked was the cost of acquisition in case of a long-term capital asset, when you sold a long-term capital asset, was allowed to be adjusted for inflation. So it was allowed to be bumped up so that your gain is adjusted because of the inflation. Now, this has been done away with after today, after 23rd July, whatever sale takes place, there is not going to be any indexation of the cost, but there is a reduction in the tax rate from 20% to 12.5%. So to an extent, this cost inflation that will not be adjusted is compensated by the reduction in the tax rate. So equity oriented and equity shares, if we may talk about, that is the most popular investment instrument. Earlier, the period of holding was 12 months, which continues, but the tax rate used to be 10% beyond 1 lakh rupees. Now it is going to be 12.5%, but the threshold of 1 lakh has been bumped up to 1,25,000. The short-term gain used to be taxed at 15%, which is now going to be 20%. And of course, on this, there is going to be the applicable surcharge and the cess, which applies to any taxpayer. For immovable property, which is the other very popular investment for an individual, there is no change in the holding period. It was 24 months. It will remain 24 months to be classified as a long-term capital asset. And the tax rate, which used to be 20%, will now be 12.5%, just like any other asset. And the short-term capital gains will be taxed at the slab rates. So all in all, a step towards simplification of the capital gains regime, But I think there is still more room to simplify it further. Salil?
So the indexation part, if I have a long-term asset, do you think what kind of behavior you think would the government want to promote, through these measures?
So if you have a long-term asset, let's say you buy an asset, if you hold it for 12 months or 24 months and then sell it, what happens is you pay tax at 12.5% as compared to your slab rates that you would have paid if you had immediately bought and sold. So I think the steer of the government is to encourage taxpayers to invest for the long term rather than for the short term. Immediate buying and selling. Instead of that, hold, wait for an accretion, and then dispose.
Rajiv, I'll bring you in here. Obviously, the markets have had a knee-jerk reaction, and then it's bounced back. Do you see what kind of direction would the markets take in terms of the fact that there is promise for growth, enough being done for social welfare, enough being done for jobs? Is there enough bullishness you see in the ecosystem for both investors to bring in to raise capital, or even for corporates to expand their businesses?
I don't think anything's really changed yesterday over today. Thanks to the budget. I think the underlying growth impetus for the economy continues to be strong. We spoke about the fact that fiscal prudence has, there was a bit of anxiety that because of some of the election results, populism was something that they would go down. That certainly has not happened. Fiscal prudence is very much on the table. You've seen bonds rallying as a result of that, and therefore if cost of capital for the economy is going to go down, that is certainly positive, both for the economy as well as for the markets. Two is the growth impetus continues. There have been added growth impetus that have been included in this budget, including hopefully creation of more jobs. That once again is positive for the economy. So therefore, I think if you broadly believe that the economy is going to do well, and therefore corporate India is going to do well, I think it is therefore logical to be positive as far as markets are concerned. And if I superimpose onto this the fact that financialization of assets continues in India, especially if you look at the amount of money that is coming into mutual funds on a month-on-month basis through SIPs, etc. I think there is enough liquidity to be able to support the incremental requirement of capital from corporates to be able to fund their growth as we go forward. So I think it makes imminent sense for you to continue to be bullish over the long term as far as India's growth prospects are concerned, and therefore corporate India's growth prospects. And I think, as they always say, price performance will always follow the results of corporates. What happens in the very short term, I think, is always very difficult to figure. I mean, I think if you saw, for example, what happened post June 4th, conventional wisdom would have told you that we shouldn't be, the levels of the market shouldn't be where we are, because we got a huge negative surprise on 4th of June. So therefore, in that sense, to be able to predict what happens in the very short term is difficult. But I am quite bullish as far as the prospects for the country, and therefore prospects for the stock market in the long term.
Yeah. Rajiv, this one stays with you as a senior banker, and it's a bit of crystal ball gazing, I know that. But really, if you look at what's happening in the West, is there a macro global economic factor that we need to, or a geopolitical factor that we need to be concerned about, Rajiv?
I think geopolitics, we've probably not seen as volatile a geopolitical environment as we are currently seeing in a very, very long time, where we currently have two wars playing out at this point, and there are other incendiary environments playing out across the globe at this point in time. We also have a unpredictable US elections coming up in literally 6 months time, and that will have implications for the market and geopolitics as we go forward. And so therefore geopolitical headwinds, I think, are not going to go away anytime soon. But the good thing is the fact that India is a very domestic economy. Domestic demand across pretty much every sector continues to be strong, and I do believe that given that resiliency, the ability to absorb much of this geopolitical volatility is quite strong from an Indian perspective. But I think headwinds from that are inevitable. It may not necessarily impact business performance across most industries, but it could certainly impact us in terms of global money flows now on the equity side on one side, and now that we're now have become a meaningful player in the JP Morgan bond index as well, on the bond side as well.
Mousami, I'll bring you in here. Is there anything more that you think Nirmala Sitharaman should have done? Are there any boxes that need to be ticked off, Mousami?
So, Salil, expectations from an individual taxpayer, and I'll talk from an individual perspective. So, expectations were really high as regards tax rates moderation, as regards higher deductions for expenses or investments, or maybe more investment in infrastructure, like infrastructure bonds that used to be there earlier. But we've not seen too much of a moderation in the tax rates. Of course, there has been some rejig in the simplified tax regime, making it more attractive, more beneficial for taxpayers, a further saving of a few thousand rupees. But when we compare the highest tax rate that we have in India today, like a 39%, with the more advanced nations like Singapore, I think we are quite high, and that's the reason we see a lot of flight of capital from India. Business families trying to set up outside India, shifting residency outside India, which I think, if the tax rates are moderated, will to some extent be under control. And while I say that, I would like to say that the tax department or the government has implemented a number of measures now to check tax evasion, to make sure that the tax base is wider as compared to what it used to be earlier, so that the tax burden does not lie only on 2% of the population like it used to be. And with these measures like the AIS statement, the TIS, and tax deduction or tax collection on various transactions, with the widening of the tax base, I think it is a possibility to moderate the tax rates. And if tax rates are moderate, more and more taxpayers will be willing to comply and pay the tax. So that's what I think could have been done more. But I think this is one step. As we move along, we might see a moderation in the tax rates in the coming years.
Mousami, still with you. One more question here. That do you think that, is it fair to say now that the new tax regime has been successful? She's given us a number.
She did mention that in the last year, out of all the individuals who filed their tax returns, about 2/3 opted for the new tax regime. And this year, with the rejig that has happened, the increase in the standard deduction, she's increased the standard deduction from 50,000 to 75,000 only in the new regime, not for the old regime. Also, an additional deduction for NPS, which again is only in the new regime, not in the old regime. And the rejig in the tax slabs, of course, it gives a further 17,500 rupee savings as compared to someone who would opt for the the new tax regime last year. She mentioned that in her speech, right? Yeah. So till last year, the takers for the new tax regime were either the very low income brackets, up to 7 lakh, there was no tax at all. So that was a no-brainer. And the very high, over 5 crores, the tax rate under the new tax regime was 39% compared to a 42% under the old tax regime. So we saw taxpayers from those brackets definitely going for the new regime. This year, we'll have more takers because if I would call it like a break-even point of the exemptions and deductions that one has. So till last year, if you had exemptions or deductions up to 3,75,000, which you would lose if you go to the new tax regime, or rather more than 3,75,000, then it made sense to stay in the old regime. This number has now gone up to 4,33,000. So what it means is, if you are going to claim exemptions, deductions in your return, which are more than 4,33,000, then you should stay with the old regime. Otherwise, you should move to the new regime. It will be more beneficial for you. So depending on each case, each facts of each one's case, one has to check whether the old regime makes sense or the new regime makes sense. But my sense is that for a large part of the individual taxpayers who do not have too many investments or deductions, the new regime will make more sense. And at the same time, individual taxpayers will be free to make investments not based on their tax deduction that it draws for them, but rather on the safety of capital, the return that it offers, and other considerations.
Thank you. One last question coming your way, Rajiv. Is there any box which is unticked, which you'd want, let's say, the government to look at in future budgets?
I think not necessarily a box that's not been ticked, but I do believe that the tinkering of, while I do appreciate the point that Mousami was making about the fact that capital gains has certainly been simplified, the increase in taxation was, perhaps, not necessary. I mean, if you see the total amount would probably be about 20,000 crores. If you, and will probably reduce if you take the 1,25,000 threshold, etc. And I think that could have, there are other avenues that could have perhaps been explored to be able to get this done. I'm not sure what is the larger macro issue that perhaps is being solved for just by an increase of 5% and 2.5% respectively. Would be my only niggle in this budget. And I think the point that was made about the fact that indexation, etc., has gone away, I think is really part of that roadmap or journey towards simplification. I think over a period of time, the intent is to bring the overall tax rates down, but take away many of these benefits or deductions as we go forward. So therefore, to that extent, there is one can't have too much of an argument on that. But just the tinkering of the capital gains perhaps could have been avoided.
Thanks a lot. A bit of a sour note, I guess, for investors who came in as a surprise to them. We'll have to see, of course, how it plays out over the next few days and the next few months. Probably corporate action is something that we'll have to see in the Q2 earnings, and hope that the growth momentum continues as it was in previous quarters. Thank you very much, Rajiv and Mousami, for taking out time and decoding the budget for us. And please stay tuned and read more on Forbes India's budget coverage plan. Thank you very much.